Hello, Warriors. Alexander, Richard, Hugo, how's everyone doing? The ruble doesn't think there's going to be an invasion, at least not yet. So we keep getting these wicks every time they try and rally US dollar ruble. So it's looking pretty heavy. All right, so the ruble's saying one thing and gold is saying something else. But if you recall yesterday, I said, if you want to be long precious metals, you got to be long the gold, because silver, tell me this, I'd be very disappointed. Although I will say this, that even though silver has been lagging, the silver miners have put on, they're almost acting like gold miners. So, here's the juniors. They've been rallying, and here's First Majestic. A lot of people trade. And, the Tell giveaway day was this day, Monday. Remember when everything came in sharply lower? And gold was down 25, silver down 50. The shares actually closed unchanged to a shade higher on the day. So that was the first time I've seen that in many months. And I'm not long gold. I'm not short silver. I have no position in it. Feel uncomfortable about it, but that's the way it is right now. One thing to keep in mind, I'm not sure if it happens every year, but in my earlier years as a commodity broker, there used to be something called a February break. And that was when most commodity markets were under pressure. I have to say that yesterday's action in crude was pretty negative. They're trying to bounce it here. Maybe it could blast again. There'll be divergence, but we're right around the 2-week reversal here with a day to go. You need closes under 92. Here was the close 2 weeks ago. So with everything happening here in the last couple of weeks, crude like silver isn't expressing fear like gold is. Hello, Kareem. How are you? So there's, 91.95 would be a 2-week reversal. Ryan, how are you, buddy?
Yeah, good morning, mate. I'm okay. You?
All right. So have yields peaked? Yen's kind of acting like it. It's a pretty negative action. I'm not short, but sitting right on this shelf here.
Yeah, it's looking a bit precarious, isn't it, down here?
Yeah.
Yields, I don't know. We've had a little dip under 2%, and we're back up above it. We seem to be sort of doing a bit of a flip flop around it at the moment. A bit undecided what it wants to do. Obviously, the Ukraine stuff is weighing. Every time there's a headline popping up, the market has a look, see what it means. We're getting to that point where it sounds terrible, but you want something to happen one way or another, because it's just dragging. Hopefully a peaceful resolution, obviously. We don't see any bombs and bullets flying, but it's beginning to drag. But what I've been noticing is the risk pairs and cable, the euro, Aussie dollar, you get a headline in it and you get a dip in these pairs, but they come running back not long after. So there's a big element that if a lot of the market's saying, okay, right, well, we know the headlines are coming out, but we're still going to keep buying the dips in these pairs until it's either a real major headline or there's a resolution. But it's still hard to get in a trade and think, I can ride this for a half a day, even a few hours, because you get one headline and if you're the wrong side, you're suddenly 50 pips offside in a blink.
They're even doing that with the stock indexes, right? You see, it's like there's kind of a feeling of just buying the dips and everything.
Yeah.
So, across the board, I find that interesting. So, and that's in an environment where the Fed's going to tighten, which is, I think for this move, yields are close to being done. Here's TLT. I mean, TLT is due for at least a bear market rally here. I thought it'd be accompanied by risk off, but it doesn't have to be. I wouldn't be short bonds now.
Yeah.
Look at that. So
But you're
that,
right.
that argues for a lower US dollar yen.
Yeah, potentially. It potentially does. Like we say, we're heading into a hiking Fed. You've got to take that consideration as well as what's happening in Japan. Japan, as much as the market expectations are rising around the globe for central banks tightening, Japan's still towing the line, saying no, we're not getting close to looking to tighten yet, and obviously that's going to play in the divergence trade.
Okay. And euro pound, you were one who thought last week when we, the week before where we had a nice rally, we'd come back down and test. Still looking for new lows here, and came in. Good call. Came in up here. Yeah, was saying it would work lower. Nice trade came in.
Thank you very much.
And see how I remember? I bet you're surprised I remember that.
You still got it.
Coming from you? No, I'm not surprised at all, Dale.
Oh.
You remember everything.
He's still got his marbles.
And a very good morning to you.
Good morning, buddy. Yes, I'm an elephant. Except, I'll walk into a room sometimes and say, why did I come in here? But I can remember but I can remember everyone's trades. But I don't know why I go into a room sometimes. Anyway,
everyone's got his Biden moments.
Yeah. So, what are you thinking here? The action
we just have. It's really headline trading. We just had the US envoy saying that evidence on the ground is that Russia is moving towards an imminent invasion. So this is a crucial moment. Up till then, dollar yen actually is holding very well. I suspect we are just above the daily crowd. In my book, it comes in around 114.95. We tried 3 or 4 times below. It feels like a few lazy Japanese bids around there. They might be trading this crowd or importers leaving bids there. So it has held and remained bid at 115, but there is no rebound. Nobody really wants to keep long risk right now. So there's no rebound. We need to get back above 115.25 or so to create some breathing space. For the rest on that sterling, I know the divergences are slowly going to ebb away, but I still think for the time being that the Bank of England is ahead of the ECB, and that reflects in the euro sterling after the week and a half ago Lagarde BOE spike. The highs have been coming a little bit lower in the euro sterling.
Okay.
84 is now holding. 84 is capped on the euro sterling. On my shorts, I'm not looking for more than the 83 perhaps if it goes down there, but the price action tells me it could, so I'm keeping it running. 84 is now my just above 84 is my stop. If it breaks back above 84, I'm gone, and perhaps even go long.
Okay, it looks like an interesting area. That's a rally we had last week.
Yeah, and it capped a couple of times in the 84 zone. We tried figure yesterday, day before, and it caps.
The Russian market isn't acting like a invasion is imminent. There's one of the ETFs.
We never know what CBR is up to.
Yeah. So.
But now we find out why Russia and China were piling up in gold towards the end of last year.
Oh yeah, for years.
Yeah, but there were like these reports out, I think towards the end of last year, where they were really piling up in gold.
Yeah, well, there was that chance. I mean, it broke out. So, then you had a classic test. I don't know. Anyone have any upside objectives in gold?
Well, there are levels just above 1900, 1905, 1910, 1915. Stelios was looking at that as well, I think.
Yep, and Grega as well was looking at 1910. And good morning, everybody.
Hey, good morning,
mate.
I wanted to say, you're talking about silver underperforming gold. Yes, it is, and miners doing well as well. But you know what? on a bull market, I think we know that 9 times out of 10 silver outperforms. So if I'm still looking at gold, if we do get a breakout in gold, there's no way silver is gonna stay back. So 1910 in gold, and then really you're looking at the all-time highs. But
Yeah.
I don't think we're gonna get there before or test at least those levels and before the FOMC in March. I think same with yields. Yields are 10-year US is around 2%, and it's kind of looking for direction. And I think unfortunately we're in for a few weeks of nothingness until, or chopping around basically, until we get some indication on what the Fed does. Because remember, we're pricing a 50% chance of a 50 hike. So they're either going to do 50 or not. They could do 25 and be hawkish, or they could do 50 and be dovish. You know, they can do a lot of things. But my view is that they're not going to do a 50. There's no reason for them to do 50. But you know, nothing is a 0% probability. Far from it. The market thinks there's a very good chance that they might do 50. So I think, unfortunately, we have to wait until the 16th, 17th of March for that to pan out. And then I think that's going to be the start of the next major move, whichever way that is.
Yeah. Stel, yesterday, the pricing of the 50 BPs dropped back below the 50% or whatever. The yield curve actually steepened a little yesterday. And I think it might have to do with the expectations maybe switching just a little bit between the 50 rate hike and an earlier start of the runoff of the balance sheet. And I think there we might see the yields moving, ticking around a little bit, and as you say, moving up and down, but basically waiting for the Fed now.
Yeah. But, you know, we'll see. As I said before, I think the 50s, you know, it's we do have high inflation, yes, but, you know, why surprise the market like that? Why show urgency when you can do one at every meeting? And, you know, obviously, if inflation goes even higher and starts becoming, I mean, it's already a big problem, but if things don't look like they might be reversing anytime soon, then, yeah, they might do 50. But
I think what will be interesting
we'll
is when we get the meeting, see who the dissenters are. We could have a case like the Bank of England where, you know, the split for 25 and 50 pips was, you know, 5 against 4. We'll see the dissenters in the FOMC. We'll see those who said, oh, we should have gone for 50. And if that's a big number, then we're going to have a similar situation to the Bank of England where it was a close call.
Yeah, indeed.
Cable's putting in a kind of a negative candle here. Just wanted to call your guys' attention to it. It's only the 15-minute, but we haven't quite gotten up to the old high here. So do you want to be long Cable, even though because it's outperforming Euro here, or is it a range that you just traded as a range? Are we breaking out of any of your triangles came in?
They're trying. Yesterday I was seeing triangles everywhere, so I looked away.
Yeah.
But no, I still think Cable is in sort of a range, headlines here and there. So I'm not overly convinced on the Cable. So I'm rather staying in Euro Sterling right now, and yeah, Cable more like in a range. I reckon it's just like Euro Dollar is more in a range now. Probably 112.80 figure. 114 is now going to be looked at. Break out of those two levels, and we probably accelerate for 50 to maybe 100 points. If it breaks at top side, have a look again at the 115. If it breaks downside, we might have a last look at the former lows.
Yeah,
it's
that's
possible.
the way I look. Yeah, I see it that way.
I just want to mention something, because I was speaking to one of my guys who I know, FX guys, and he's saying that you know, the liquidity isn't the best at the moment, or the order flow isn't the best at the moment. It's not that it's drying up; it's just that people are showing a bit more cautious. So now, if we get these headline moves, we could see those, you know, a bit bigger, where, you know, we get headline, it's 30, 40 pips. Now it might be 50, 60 pips. And we had one of our guys in the room was asking this morning, you know, he's seeing correlations break down, not working and the usual rule of thumbs that you see the market's not working. That's what you get when you get geopolitical events like this, and there's a lot of people who haven't traded through anything like this. And you've got to understand that the market we're in, when you get these moments, common sense doesn't prevail. You get a headline, it can shift the market 50, 60, 100 pips, whatever. That's it. You can't do anything about it. And what happens after? Another headline comes out and it jumps 100 pips. You can't account for that when you're trading. All you can do is know the sea you're sailing in and adjust your trading accordingly. So if you get some profit on the table, bank some, lock your stops in, whatever you have to do to protect that, get it in fast, because one headline and you're blown up and you're offside and you're a deer in the headlights. So sometimes these correlations don't work, and the things that worked 2 weeks ago aren't working now. And traders just have to understand that and know that what the situation is you're trading at the moment, and take care of that. Take care of your account.
That's a pearl. Many pearls in that, enough for a necklace.
A pearl necklace.
Yeah.
No.
Anyway, I was thinking more like a pearl necklace that June Cleaver would wear. Leave it to Beaver. So, different generation, but really, it's take those words to heart. What Ryan's talking about there. So, I wonder how Blake is today. How are you today, buddy?
Allergy ridden. How are you doing?
Oh, okay.
Yeah, I didn't pop my allergy medicine this morning. How are you guys doing?
Everything's blooming.
Yeah, everything is blooming. But what's blooming are triangles everywhere. I'm going to agree with K-Man. We've got triangles.
Triangle garden. Everywhere
they're blooming. But as one thing that he mentioned just as he got on is, Envoy says, an invasion is imminent. So the market's a little freaking out right now. And you can see a little bit of the moves that are happening, the S&P, and this just happened over the last, 10 or 15 minutes. You can, let's go over to you can see the S&P was kind of pushing higher and then just flipped lower. By the way, I should probably redraw this because this is an intraday trend line that we had, and you could just really go across the tops of those, the highs. But you can see we're really just kind of trapped, and the market just obviously rejected some resistance there because of that. But it's happening everywhere. I mean, you're seeing little spikes around where the dollar just caught a bid. You got the euro was kind of pushing higher, and then it spiked down. Cable as well. Aussie was pushing up towards this big resistance. Even the dollar MEX was probing below support, and then it just popped right back up. So
good eye, Blake. Yeah.
What's that?
Good eye.
Well, it's just you've got to be careful. And what Ryan just said is very true. Most people haven't traded in this type of environment, but I will tell you this much based on
our grandfathers. No one since our grandfathers have. World War II, right?
But I'm going to say that during, these geopolitical risks, when you trade during invasions and things like that, you get some, unless it's affecting directly the market you're dealing with. Like if you're dealing with the U.S. markets, heaven forbid there was an invasion on the U.S. soil, like September 11th, but the U.S. markets will end up brushing it off, But right now, in the interim, while there's this risk, it's very headline driven, as Ryan said, and that's what we have to be careful for. It's like you sit there and don't want to get too aggressive. Everybody in the ForexAnalytix chat room knows that I'm trading very, very light right now. I've got fractions of what I normally trade on because it's a headline. It's like, man, okay, here's another headline. Just when you think that the market starts leaning in one direction, you get one other move, right? So like this is the dollar index on an hourly basis, or excuse me, here's an hourly basis. We'll give you more of an idea. So right now, I think that you just have to be extra careful in the markets, and we've got to find direction. It was one of the things I was talking about with Chris Weston yesterday on the trade-off and that was one of my points were I'm just waiting for some inspiration here because I just don't have a lot. And the markets are consolidating pretty much everywhere. And we are, the point I made yesterday is we're probably Russia fatigued right now. I know I am. I don't know about you guys. I know actually Ryan gets up waiting for Russian headlines. So that's, he's probably the only one not fatigued, right, Ryan?
Oh, I've had enough of it.
I can't wait. I want more, right? I want more. But, we're fatigued with Russia. There's peak central bank hawkishness fatigue. Everybody's like, oh my God, how many rate hikes are we going to get? But the market's already quote unquote priced it in. Stocks are range bound. FX is range bound. So right now, I think that, the fact of the matter is we are just need, and on top of it all, we know that inflation is running hot, and I'm sick of hearing about it. And the market's I don't even know if the market's still trading off of it anymore. So we're just waiting for some inspiration in the markets. And it's been that way all this week. Tomorrow, I think, and today actually, we have some voting members of the FOMC that are speaking today at
Bullard. Oh dear.
Yeah, we got
crap's he going to come out with again?
We got Meister speaking. Tomorrow we've got Waller, Williams, and Brainerd, all before the market closes. I can't wait. But you got all these. I'm joking about that. You got all these, Fed heads and their mouthpieces because. People were asking yesterday, are FOMC minutes going to matter? I'm like, no, because everybody's waiting to hear the words coming out of these guys and gals' mouths because what they said 2 weeks ago doesn't even matter anymore because what they're saying now obviously matters. So
that's being polite, saying the words are coming out their mouths, Blake.
Yeah.
I'm coming out the other hole.
I'm trying to be a little PC here. But anyway, so I think one of the this is probably a really good view of what you should be, just kind of thinking about right now as far as the S&P goes. Let me get rid of this really fast. So if I look at the S&P on a more of a broad market, right? I think of it between a 4,600 and a 250, 4,300 range. Notice where we're at. Okay, so just let's zoom out a little bit, and I'm going to say, based on my analysis a couple of weeks ago, I'm starting to actually look really smart because I said, hey, we're going to be consolidating for probably the next couple of months, building out a right shoulder for a head and shoulder pattern, right? So here we are, after talking about that 2 weeks ago. Here we are, now still doing it. Annoyingly so, but now today or this week, we're really just stuck in this range and we happen to be in the middle of it. So right about there. So, we are right here. So if you want to, kind of wonder why we're not getting a lot of direction. And as Ryan, you pointed out in the chat room, I'm sorry, you were saying that somebody in the chat room was talking about correlations. One of the things that when you're in the apex of a triangle and it's really wedging and you're right in the middle there before a breakout, nothing makes sense and the moves don't make sense. So that's kind of where we're at. And I think so. Yeah. All right. Enough talk about sideways action. One of the things that is moving and has held out really, really well is gold. And I have to say, you guys were talking about upside targets. I'm just going to tell you what I was thinking is 1900. As long as we trade above 1850, 1900 is the 161% extension of the last move lower. And it is a triangle breakout. So we have to be very respectful of that. Now, one of the things that you might want to just think about, just when you come out of a triangle, like some of the risks are you can get Gartley patterns developing, right? So I'm gonna put this right. I have this off here. There we go. Okay. You can get Gartley patterns developing, people start drawing things like that, or, you get like from the highs. Regardless, you got to start looking at some of these levels as they coincide with, horizontal resistance levels. I think that we are going to be getting into some resistance zone. And remember, everybody's bidding up gold, on geopolitical risks. Once you get past that, let's see how gold responds. But I think right now, the path of least resistance for gold is higher. And I'm surprised that silver hasn't really responded, but it's
starting to.
It is, but it is it is because of geopolitical risk. And so one of the things is when gold is outperforming silver, I tend not to be very bullish on the precious metal complex. Like, I'm not looking at this gold move as, being very strong. I know it's strong right now as far as the breakout goes, but I don't know if it's sustainable without silver. Silver is really going to have to play some catch up here for me to get excited about these precious metals. Any final thoughts there, guys?
Interestingly, we have platinum that's outperforming both gold and silver. So for some reason, silver is underperforming. I don't know why, but it's definitely looking, pretty strong so far. But as I've said so many times before, for bulls, we're not out of the woods yet. You have to break that 1900 in gold or 1910, and then you can start talking about a proper move.
Yeah, and I think 1900 is going to be a big level, but I have to reiterate, I wouldn't stand in front of it because I'll make my assumptions on what I think is happening in Russia. That doesn't matter. My assumption is just an opinion that really is irrelevant in the grand scheme of things, as far as opinions go, because Putin is Putin and Russia is Russia, and they're going to do whatever they want to do. And they're going to do, I think Putin is a little bit, he's a clever leader, right? He may not be, everybody's favorite, but he's not a dumb person either. So he's going to be playing his game, and to be honest, I don't even know what his game is. So right now, as far as gold goes, there's no sense in standing in its way, right? Because it is rallying, and we have to be respectful of the fact that it is breaking out and it held every level of every level of support it was supposed to. As long as we trade above 1850, there's zero reason to be bearish on gold, right? So so I just want to mention that. Let's see, anything else that we should, we talked about crude, and Dale, you had mentioned something about crude oil. Oh, I got to mention actually two things before we go. You were talking about crude oil, and they were trying to reverse it, but I want to point out that crude, let's get to it, has really very critical support at this channel. We've been watching this channel very, very, very carefully, with all the ForexAnalytix folks, and you can see how we're just, we were probing below that. Yeah. And, we're holding as far as I'm concerned. And, I've told everybody as long as we're above 90. Now we get below 90, we might trade back down to the 80s, but I have to be pretty convinced that we're sustaining below 90 for me to think anything other than that. It's
hard to be convinced of anything in oil with the situation.
Well, yeah, oil's it is holding up well. And I have to also say that the euro is holding up surprisingly well. And that's something that should be respected, because, and I was making this case, I can't remember where I was making this case. I think it might've been on the daily roundup yesterday or the day before yesterday. I was talking about if I didn't know anything about the markets and like currencies, if I wasn't a currency trader and I was more of a macro thinker, and I was told, hey, Russia's going to invade Ukraine, and how's that going to affect currencies? If you had to just from a macro point of view think about it, looking at like the G10 currencies, you go, well, crude oil is going to strengthen, right? It's it's going to cause some supply issues there. So crude oil is going to strengthen. So you buy the Canadian, and then the euro would weaken, you know, as because of the Ukraine, you know, part of it. So you'd see the euro weaken. So you'd naturally just short the euro by, you know, short the euro by the Canadian. Well, that trade is actually not working, and actually it's holding up a lot better than you would expect. And so if I want to think about a de-escalation situation, one of the, I think, best trades to catch people wrong-footed would be the euro Canadian on a break here. So, you know, if we start breaking above, like, let's call it like 145, and then we get above that 200-day moving average, and we squeeze past that double top right there.
Wow.
You know, we're gonna, and you can see that little false breakdown. I think the euro Canadian could trade right back up to 150 very quickly. So that's something that should be on everybody's radar. Okay. Anyway, that's
a quarter.
What's that?
That could make your quarter.
Yeah, it could. And that's something that I, again, you know, I'm just trying to think, hey,
Right.
what should be working, what isn't? And this is one that I feel should be working. But anyway, all right, guys, I'm gonna pass it on over to you. Remember,
Adam's going to be like a minute or two late if
Oh,
you want
okay.
to talk
Well,
about anything.
yeah, well,
we
you
did
know,
get some US data, which was mixed, so nothing major there.
yeah, I mean, you know, and by the way, if you guys don't use ForexAnalytix, there's a lot of little tools that are very valuable that are just embedded into ForexAnalytix. That's why I always keep it running. You know, obviously we got Live Squawk, the news, it's always coming. But we have the data flash, which is nice. You know, for those of you that trade economic data, that you trade like news releases. I think one of the only features I ever used of my Bloomberg terminal for the last 5 years was really just the news as it came out. And funny thing is the data flash that's included with ForexAnalytix sometimes beat Bloomberg's releases as quick as they come out. So anyway, that's included with ForexAnalytix. You just have to go over to calendar, click there. The risk management tool is also something that I use actually quite extensively and quite a bit in here. And I want to show you, everything is based whatever currency is on the left. So whatever your base currency is, but I want to show you how great this is. Like, let's say, you know, you trade the dollar yen. Okay. Whoops. I'm sorry. I didn't mean to do that. The dollar yen 115.05, right? Let's just say you bought it around there and you put in a stop loss of 114.89 because you know that 114.90 is support. And then you're targeting 116, right? And then you put in your position size. Like, let's say you're trading 100,000 in currency. Well, then your risk is, you know, $139 based on the base currency. Your profit of 825. Risk reward is almost 1 to 6. So I use this all the time when I'm trading because I always want to make sure I'm within a, you know, 1 to 3 or sometimes more risk reward situation, because even though I'm not going to make 1 to 6, I know I'll peel the position off well ahead of that. I want to make sure those ratios are always high because, you know, I'm a human, and when I'm profitable, I tend to take, you know, some of the profits off the table. So that's why the risk reward, even though it's skewed this high, I never end up making that much. Very rarely anyway. So, but I use this calculator all the time just to make sure that I'm in, you know, within my my ranges where I should be for risk management. So anyway, just a few tools that you get with ForexAnalytix, and that's not to mention the app and the chat room and everything else. So make sure you take advantage of it. And is Adam here?
Yes, he is.
Okay, well then I'm going to let you go. So K-Man, Ryan, Stelios, Dale, thank you guys. Have a great interview with Adam. I always like to listen to Adam Button. So make sure you guys all stick around, and I'll see you guys soon.
Thanks, everybody.
Thank you,
Gold
team.
daily highs, by the way.
Well, you know, Adam Button called that move in gold last
Well
time
done.
I talked to him. Good morning, Adam. How are you? Let's see, I have to unmute you. Good morning, Adam.
Hello there.
There you are.
All right.
How's it going, buddy?
Pretty good. Pretty good.
All
I'm doing
right.
video today or no video? I'm in
Yeah,
the
go with-
dark here.
Yeah, okay, yeah. Go Go do some videos. Help your modeling career. All right. And I'll share my screen, Adam. So let's see here. That should be it. So no Twitter. Metal's on fire, Adam.
Yeah, gold's having a real run.
Yeah.
That looks good.
Okay. So for some reason, they're not letting you share the screen.
That's all right. That's all right, Dale. We're just talking anyway here.
All right. All right. Okay. So you were talking about it, now you can, Adam. Want to show you?
Sorry, I was talking about what?
You were talking about the gold last time we were in touch with each other, and said that February was a seasonally strong month for gold, and you've been bullish oil forever, and wondering what you're thinking here. I saw your tweet. I believe it was this weekend that we would be talking about trading in a war.
I was asking about that, whether it would be.
So do you think they're going in?
Yeah, I mean, listen, I think at this point, what's interesting to me is the U.S. is still banging on this. Just, in the last half hour, the U.S. envoy to the UN said they believed an invasion was imminent. And, we're not seeing the market move on that anymore. So we're at the point now where until it happens, the market's skeptical. I think there's a bit of a crying wolf going on here. Now, we saw overnight, a bit of the shelling that was going on. And I think people initially mistook that for the Russian military rolling in and then gave it all back. So the jitters are really there. But I think this time we're at the point where we need to see the confirmation. That said, a lot of these moves took off overnight and then gave it back, but gold has held out. We ran the stops above 1880, haven't given a cent back. We're right at the highs here today. And, it's impressive. That's an impressive move in gold. Because, there's not, look at that chart. I think that is really it. The inflation side, you can argue both ways of it, that the central banks have lost control of inflation. Governments may have lost control of spending. Fair enough. You could kind of go both ways on that. You have yields moving up, so you have some competition there. But I would argue that you wouldn't want to own bonds right now because of the potential for capital losses. So, gold
even after a break like this, Adam. I'm looking at, I'll use TLT for a proxy. Okay, so we are close to the lows that we had in this last year, and it doesn't look bullish, but we are starting to get some bullish divergences, and maybe we're still going to have a risk-off event somewhere.
Yeah, that's fair enough. Italian bonds at the start of the week were down, I think, 9 basis points. So it was, we're kind of taking this pause here right around 2%, 10, since you have that up there.
Yeah.
And that's fair. I don't know if that tells us much, given the size of the move we've seen since the start of the year. But then again, I don't know if it tells us much about gold either.
Do you trade ruble?
Listen, I think it's an unbelievably asymmetric trade if there is no war.
Yeah.
Because you have oil. Russia's the number one oil exporter in the world. And
who's number two?
Saudi Arabia.
No, we are. Yeah, we are.
Yeah, I know. U.S. is the number one producer in the world, but the U.S. uses so much of its own oil that it doesn't have as much to export, whereas Russia does.
Yeah, we're just greedy gas guzzling nation.
We're a lot of gasoline,
a lot of air conditioning and heat, and
but so the ruble's obviously been crushed. But if they demobilize, I wouldn't necessarily say it's asymmetrical at this point. But if you believe that they aren't going to attack, that will take some of the life out of gold, or pardon me, oil. Fair enough.
Yeah.
But the ruble would be, all else equal, the ruble could be much higher than it is right now.
Yeah, and you know what? This was Monday, so lower high. Didn't attack the high. This was in January.
It hasn't even come
So-
close to that, really.
Yeah, that's what I mean. So it's showing some resilience, and then they're trying to pop it again today, and they're leaving a little wick, and a lot of people are pointing towards a Russian market that maybe they had to, maybe that's why they moved troops to the border. But the Russian market, I mean, they're cracking moving averages and everything. A lot of people like Russia right here.
If you were to dive in, I'm sure there are names in that stock market that are trading just stupidly cheap, presuming there's no war and they don't get sanctioned.
Yeah.
Well,
Well,
you trade
maybe
that.
when you look at the weekly in Russia, it's almost like it didn't bottom until he had 130,000 troops at the border.
Yeah, wow. I mean,
Isn't
I
that
guess
weird?
it's trying to tell you that there won't be war, and
Yeah.
maybe it's trying to tell you that anyway. And if you want to, and you can spin that over to any stock exchange really in the world. And if it all dies down, I mean, a leveraged trade on S&P futures, will get you the same directional move. If that appears to be the case. Now, I agree with what you're saying, because you don't need to leverage it up necessarily, but that seems to be which way the wind is blowing. I think reading between the lines on Biden's big speech the other day, he did say we don't have plans to go NATO into Ukraine. Those are the kind of things that you try to settle on. Russia obviously wanted a hard commitment of no NATO in Ukraine.
Yeah.
Instead, they put on the table, well, here's a soft commitment. And then Russia says, and Russia has to decide whether that's
And we're
good
sending
enough.
our troops these pierogies in Poland.
Yeah. Well, I mean,
Ever
and that
had
could be
one?
it too, right?
Ever
It could
had
be-
one, Adam? Come on, you could admit it.
I'm from Central Canada, man. We have pierogies. I have pierogies
Okay.
here once a month.
All right. It's good to carve up on them once in a while before you trade. Just giving you a little trading tip. So
My mother's name is Zaretsky, which is
Oh,
a Ukrainian
I'm
name.
half-
So
Ukrainian, yeah. So pierogies, they cross the border from Poland. So I'm looking at was talking about Brazil a few weeks ago. Where when the dollar looked like it might be getting ready to turn, and wow, what a performance in Brazil. So I'm thinking Russia, and then I look at Brazil, and then even emerging markets look like they're trying to bottom here. And someone I follow is looking for new highs in DAX. It seems like there's money flows leaving U.S. markets going to international markets. Am I reading my charts correctly here?
great report I read on that last week or 2 weeks ago, and I dig it up and I'll post it on Forex Live if anyone's looking for it. And it's the theme I've talked with you about before, and it's really compelling on the equity flow side. So much money is stashed in US dollars, but the companies out there, they're tremendously cheap in emerging markets. And, you look at somebody like Brazil, it's important to differentiate, I think, in emerging markets. Brazil is a commodity exporter.
Right.
Whereas someone like Turkey, India is a gigantic commodity importer. So we get that commodity bull market that I believe we're in. You have that divergence in emerging markets. So it's be careful about picking your winners. Not that I dislike India, though I'm certainly not investing in Turkey. But
yeah, okay. So you want to go to countries that are natural resource based, agricultural based, exporters, not importers. And who's the number one importer of everything?
United States of America.
I thought it was China.
Wow, it works its way through China. Sure, okay.
Okay, so anyway, I'm thinking that people are bullish China right now. They've had a little bit of a rift. I kind of sound like an international stock analyst, but it's the first time in a while I started looking at things outside of the S&P and Dow and NASDAQ, and there is a whole other world out there. And if we're going to have a turn in the dollar, that may be where the money's going.
And it's tech too, right? If you're not bullish tech, I mean, you strip that out of the U.S. market. There's, it's a whole different market altogether, and it's just more highly valued than a lot of similar foreign markets. So you assume those dollars will flow in that direction, and that tech really represents all the outperformance of the U.S. market. by and large over a number of years. So if tech flattens out, not that Apple or Microsoft, but at least smaller cap tech, or the multiples come down, and people start looking for the value trade, then it's certainly not in the U.S. Although pockets in the U.S. as well. But I just think those dollars will flow, and it's a compelling case for Latin American currencies. A lot of big commodity exporters there, commodity currencies in general, and there's a lot to like in the metals. Copper, I think people are catching on to the story of copper, nickel, even tin.
Are they making new highs, or are they underperforming gold?
They're not making new highs. They're holding up though, and they're they made new highs at earlier last year when gold was just sort of chopping. Although gold did make new highs, but didn't really do anything too impressive compared to some of these other commodities. And fundamentally, there's a lot there to like on the green transition side. There's going to be a lot of building.
I even saw on Twitter there's a whole column devoted to people who trade copper. So that you wouldn't have seen that 2-3 years ago.
Yeah, the fundamentals are there. I mean, the mines are cheap, and there's lots to like.
So what about euro? Above 115 first, or one more shot down at him? What do you think?
I just can't get behind the euro anymore. I mean, they're coming. I mean, Italy. You look at Italy right now, and it looks like it's headed for another sovereign crisis. Lagarde comes out last month and says, we're not worried about spreads. Well, then spreads blow out again, right? Between Italy and Germany. So that the amount, for people who don't know, the amount that Italy pays to borrow compared to Germany. Of course, they're borrowing in the same currency. And the crisis in Europe a decade ago was all about, nobody wanted to lend to Italy, Spain, Portugal, Greece. And I just don't see how that can improve. The economies are so poor in the periphery. And Germany is trying to drive rates up. But even there, the economy's not so hot. And so I just don't think there's an investable theme in Europe. I mean, there is value, like I said, in their equity market, but it's middling. And it's just banks, right? Which is the last place you want to be in a sovereign crisis. So, technically, I think there's probably a trade there. It's coiling up like there's a massive amount of coins. I mean, that's unbelievable looking at that chart that maybe looks like to me like it's consolidating even more. And that's sort of 125 to whatever the bottom of that range is, 108.
Yeah, and 106. Yeah, so that's a 17-cent range. Over 23 would take it to 140. But there's confluence on this monthly. I could call it a monthly line, a weekly line, and then you have this line off these two lows, and perhaps a third drive down here.
I mean, and within that, the question is inflation, right? It's sort of the global question of, okay, where's inflation and what's the neutral rate? So, Europe, Lagarde has kind of fought it back now and said, we think it's transitory. And that ultimately means maybe they only get to, as a terminal rate, say they're negative 50 right now, basis points. Maybe they get to plus 25, plus 50, probably more like plus 10. Whereas in the United States, Canada, Australia, just showing there, we could easily get to 2, 3, maybe even 4% on the overnight rate. And so that divergence could widen, right? Even though it's, the divergence is still there, but there's real scope for that widening. So right now we're looking at Europe and saying, well, they could get out of negative rates, and fair enough.
They could fall back into them too.
Well, that's right, and I just don't see that scope on the upside for tolerating. When you have employment being what it is in the periphery, rates at much higher levels.
Would it be unusual, Adam? Because I know a lot of people that I follow. Had like a 201 to 210, max 220 for a 10-year target, and that's when they were like 113 and 130, And now that we're here and we're waiting for the first interest rate increase from the Fed, that the high in yields are already, the market already did it.
I mean, it's that transitory call. And obviously that everybody's calling for something higher right now. But we've seen that over and over.
When they do it, is that going to make the yields go to, 10-year go to 230 because they hike in mid-March?
I mean, you still really have to start pricing in almost an inversion. And you know what I do wonder about though is, well, let's wait and see when the Fed's out of the market. I mean, they've had their thumb on the scale of bonds for years, 2 years.
Yeah. Yeah.
And, let's get them, if they can get out of the bond market, then let's see what happens, first of all, which is imminent. And then secondly, maybe they start dabbling in the curve, right? If they start talking about quantitative tightening and they sell off the long end and create some curve steepness and start basically doing yield curve control on the fly, then it's hard to say because then they're back in the market. And I think that's a real risk that they want to unload some of those holdings and push up the long end. So, but I'm also sympathetic to the idea that, okay, the bottlenecks ease. I mean, energy, maybe commodities flatten out, used cars prices, whatever it is that's been driving a lot of the CPI higher. There's a compelling argument. There's a lot of one-offs there, and they don't have to go back down. Remember, they just have to level off inflation. So,
right.
If we end the year sort of 3% inflation, I mean, then the hysteria about inflation dies down. And you kind of look back to growth. Maybe it's not so hot coming out of all the rebalancing. The pent up savings end up getting spent. And what does 2023, 2024 growth outlook look like? Is it 3.5% or is it 2%? Probably have a divided Congress in that, so you can kiss economic stimulus goodbye.
Oh yeah,
and then maybe you end up pricing in the top terminal rate of 1.5. And the dollar would have to come back down.
I always like to rap with you with your home country and the currency of your home country, the loonie. And to me, this still smacks of consolidation. Really, it didn't get much weaker while crude was blowing off, and seems to be holding this, 2640 level. Do you think we're going to get a breakout over 128 that's going to take it into the 130 handle area?
I'll say two things. I'm constructive on commodities, like I said, and CAD probably does need to play catch up to oil.
The whole cosmos is now,
Is that right? I hate to be banging on the drum that everyone else is hitting. At least it was early.
We're all getting tired. Anyone who would say deflation right now would get a lot of hate mail. But yeah, so tell us the two things about loonie to consider.
But I think that's number one, and I think that's a real tailwind right now for the Canadian. The Bank of Canada is going to step on the gas. They said there's a word aggressive. We might be aggressive, or we might be. There was almost a code word that Lane, a BOC deputy, used yesterday. That might have been a hint at 50 basis points, and I sort of watch out for that. We're prepared to be aggressive if necessary. What does aggressive mean? I don't think aggressive means a 25 basis point hike every meeting. It means maybe more. So that'd be the real surprise if the Bank of Canada went 50. And they're not afraid of surprises. Like the Fed, I think, really likes to tee it up, where the Bank of Canada, they don't mind.
They use a 3-wood on the fairway.
That's just like
teeing it up.
Get it over the water.
Hey, you could even putt with it. So, we kind of have a policy about not getting political, but I have to ask you about this convoy and the Canadian government's emergency action that they could freeze people's accounts that support them. How did you feel about that as a Canadian when that happened?
I don't really like to get into that. I mean, it's not going to help anybody make money.
All right.
And I don't think it's a factor for the Canadian dollar. I mean, we're out here. It isn't. If I get tied up in that kind of, and it pollutes my Twitter feed. I wish I could just mute it all. And there's plenty to focus on in the world. So, okay. I mean, I don't. Everybody just wish everyone would go to work. And
I do too.
Same as that. So
wish we could have a time machine. So,
but that's sort of the thing. A big point I want to make on Canada is housing. it's out of control. You know, last month, house price, like the average Canadian who owns a house made $20,000 on their house.
Yeah.
And this has gone on now for an unbelievable amount of time.
It's
The average house it's well over $800,000 here in like way outside of Toronto or Vancouver or Montreal or anywhere else, you know, that you would see people moving to.
Mhm.
It's at the time, I think you're at the blow off top kind of phase where it goes parabolic at the end. Now,
What do you think would pop it? Is it going to be rates? Is it going to be rates leading to a recession that central banks are making a policy mistake here?
Yeah, I mean, it could be that. I think it will be that. Everybody's so leveraged up. I think it could be just buyers saying enough, and just dropping out. You know, these things end in a lot of different ways and for a lot of different reasons. And there's a real scope that this blows up and you get a 20% decline. And I read a bank note the other day in Canada. Oh, a 20% decline would be no big deal. You know, it's all kind of found money anyway. But you know, those things, when you get a 20% decline, can tend to turn into something really ugly very quickly, as you know, whatever's exposed in the system that we didn't know was there when the tide starts going out.
Any view on risk on equities here? You know, people don't even talk about it, but you know, as much now that we're correcting, you're not hearing as much from the bears. And but do you have a view? Do we have another rally coming here, or
I believe I think as you know, listen, watch Ukraine. I don't want to predict what's going to happen in Ukraine, but it does seem a little more constructive right now. So if I assume that the war isn't going to happen there, and I also assume that 25 basis points is coming in March, which I'm not 50. And so you get a bounce from that. And I think the Fed's going to make that very clear. They want to be predictable, gradual. Bullard is an outlier, as always.
Yeah.
And, you know, data will come in before then. But even today, you know, Philly Fed, a tad soft. Housing starts a tad soft. I mean, retail sales yesterday was strong, though. Keep in mind, that's much more important. But I think there's a lot. I'd like us, excluding tech, which I just think has gotten a little ahead of itself. There's a lot to like in all global equity markets, assuming that's what the Fed does and assuming there's no war in Ukraine. You know, that's probably a 5% rally everywhere.
Okay. All right.
And,
so
and I think that's my base case.
And what do you call it? 50-50 is going in
To Ukraine?
Yeah. Or you think it's 100%, right, Adam? It's just a question of when, not
no. I listen, I think at this point, I don't think it's happening.
Oh, okay.
But, you know, and it's just this eastern part that is really interesting. And you saw today there was some shelling, right? And it was the rebels and the Ukrainian government in sort of Luhansk or Donbass.
Yeah.
And, you know, if you think about the rebels there, they've got a bit of an incentive right now to stir things up and draw Russia in if they want to separate and be independent. Right? If that's their goal, they're not going to do it on their own. Maybe they do with some Russian backing or Russia declares, but you know, that might be in their interest to stir things up there, and it'd be interesting to see if they're able to do that.
Okay. Can I talk about the Canadian hockey team?
Oh, the men or women? We won the women's gold today.
Yeah. That's why I wanted to bring it up. And
don't bring up the men. We lost to like Sweden yesterday.
Yeah. It looks like the U.S. has the best shot, right?
It's quite a rivalry between the women there. So
I think the women hockey is actually better. I mean, they're better passers, and it's amazing.
The progression in that sport has been. I mean, I played as a kid with women, you know, a long time ago now, and you know there weren't many very good hockey players. Now you see these young women, even in my hometown. Yeah. They can fire the puck like you wouldn't believe.
Yeah,
they can skate, they can fly, and it's you know, it's a wonderful sport. And you know, my daughter's 4-year-old daughter, she's playing now. So
already
keep an eye out for her, Dale.
That's your retirement plan.
Well, they don't get paid much, but
yeah. I appreciate your time today, Adam. Good luck in these markets that this is your kind of market, isn't it? I mean,
Headlines.
every headline. So,
That's it.
so I hope you find time to sleep, even though things are really jumping with headlines.
I got a call last night as I was going to sleep telling me, oh, they're shooting in Ukraine. So yeah, well, we'll see.
All right, buddy. You're young. You can handle it. All right. Adam Button, everybody.
Thanks
follow
so much,
him follow him on Forex Live. Great news trader. And if you just want to follow his individual Twitter, it's at FX_Button. Thank you, my trading warrior brother. Good luck.
All the best, Dale. Talk to you soon.
All right, buddy. So that's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge. See everyone tomorrow. People that caught this gold breakout or bought the pullback into it, congratulations. I'm jealous. And I'll talk to you tomorrow. Adios.